So what's happening here in the U.S.? Texas House Committee passes a bill to create gold and silver-backed digital currencies. But I like this, actually. But on May 2nd, a Texas House Committee passed a bill that would create 100% reserve gold and silver-backed transactional currencies. This legislation, if enacted, would provide an option for individuals to conduct business in sound money, gold, and could create a viable alternative to a central bank digital currency while undermining the Federal Reserve's monopoly on money. So this is going to be very interesting to see. And there's the bill, HB 4903. It will now move to the Calendars Committee, which determines which bill moved to the House floor for a vote. So it's not in place just yet, but Texas has a gold vault, and they're filling it. And what I do like about this bill, if it does get enacted, and you know, this is not the first time in this country that a bill to have a gold-backed currency has been reintroduced. It just never really makes it that far. So let's see what happens with this one. Is that this one would be convertible back into the gold. So unless you can actually convert whatever the money is, whether it's digital or paper or otherwise, into the physical metal, then it's ripe for abuse. And we will see a decline in backing over time until you get to the same place again. And here we go. Gold, they're referring to spot, which for me is garbage because you can create as much gold that does not nor ever will exist. But gold holds or heads for second monthly rise on U.S. banking turmoil. It is truly a safe haven asset because it is the only asset, the only financial asset that runs no counterparty risk, is a proven inflation hedge. Gold held at home runs no geopolitical risk. It is truly a safe haven asset. Dollars? You know, I mean, look, the treasury market is falling apart. These dollars, these things that are spit out, the more they do that, the less value they have. They have virtually, officially, no value left. And they have no tools to regulate the rate and speed of that inflation. They're trying by raising rates, but they're raising them, they're creating a crisis, and then what are they going to do? They're going to lower them again, and they're going to do this. They have no tools. That's why I've been telling you this for a long time, because I knew since 2008. It's over. It's done. The party's over. What are you going to do to make sure that you can survive another day? Citi analysts predict near perfect conditions for silver's ongoing bull market. Experts suggest $30 an ounce a possibility. Well, have you tried to buy a 1 ounce silver dollar? Because you're paying more than $30 for it. So is that even, they're talking about the spot market where you can create as many silver contracts as you want that they don't have to have, and they don't have the actual physical silver underlying. Whether it's silver or it's gold, what you need to understand is it's a bargain. At this juncture, it is a bargain and so severely undervalued, it's ridiculous. So what are central banks doing? They're loading up. Don't you think you should too? You think they might know something that you don't know? You can see the resistance level over here at the beginning of 2023. You got a breakout, and guess what? You got another breakout. Now, is this pervasive? I don't know. We'll see. And $30 an ounce, you going to sell your silver when it gets to $30 an ounce? You can't replace the physical. You can replace the paper, but you can't replace the physical for $30 an ounce. And it's severely undervalued. It's time to execute your strategy, get it in place. Russian gold is in the hands of obscure firms as JP Morgan and HSBC exit. So our firms, the U.S., exits, but then there are other firms that step right in as they are defining the new world order. Who's going to be there? It's going to be those countries that have been accumulating gold. Whoever holds the gold holds the power. And the U.S. has not changed their gold holding position since, I think, 1952, not by a 16th of an ounce. So will the world just continue to take their word for it? I think the world knows the emperor's not wearing any clothes. I think the world knows that the U.S. probably does not really have the gold that they say that they have. Now, the gap has been filled by companies like V-Power Finance Security, which in Hong Kong, which says it moves cash and gold for some of China's biggest banks. They aren't depending upon JP Morgan or HSBC or any Western company to come in and do it. But it really is that simple, whether you are a government or a corporation, and certainly as an individual. You want to retain your purchasing power and your power? Take a look at this. This is the graph. Now, what do you have? Here's Bitcoin. Now, it is more popular to investors, the same as institutional. Professional investors are in black, and retail investors, so that'd be like you and me, in blue. And actually, Bitcoin is a little more popular with retail investors than the dollar is. Here are those other currencies. They're all fiat, yen, Swiss franc, and there's something else. They're treasuries, which is the root of the problem, is all of the debt. But hey, that's even more popular than Bitcoin. That makes a whole lot of sense, doesn't it? But there's gold. 51.7% of professional investors and 45.7% of retail investors fly to the true safe haven asset. Gold, physical silver in your possession. If you don't hold it, you don't own it. And frankly, it is just that simple. And when you can hold it and own it, why not? For goodness sakes, that is the true safe haven trade. And I find it so interesting that Bitcoin is being promoted in the title when gold is the clear winner, because this is conventional. This has been the proven safe haven for 6,000 years. And because it is used in every single sector of the global economy, period. End of discussion. Because with gold, there is a finite amount of it. That's it. And you have full demand because it's used in every sector of the global economy. That's why it's a flight to safety asset. That's why it doesn't have to pay you interest to attract you, because this is your wealth insurance policy. This ensures whoever's holding gold. That's why we've seen central banks buy the most gold that they have in 2022, going back to 1967, when we were already inside of a currency regime shift. And the beginning of this year has kicked off even better. So central banks are buying even more gold than they did. And when central banks buy it, is it coming back on the market? No. When I buy it, is it coming back on the market? No. Why not do what the smartest guys in the room on any given topic are doing for themselves? Because this is all repeatable patterns. So it's just easy to know what to do. Because if we're doing the same thing, do you think this time is different? Because this time is not different. And we have over 4,800 times to see that you always get the same result.